The cryptocurrency world is no stranger to volatility, yet, the recent plunge in Bitcoin's price has sent shockwaves through the market. After reaching an all-time high just weeks ago, Bitcoin has experienced a significant correction. Investors are left wondering, is this a temporary dip or the start of a prolonged bear market? The answer, as always, is complex. Multiple factors have converged to create this perfect storm. Understanding these factors is crucial for anyone invested or interested in the future of Bitcoin. In the coming sections, we'll delve into the key drivers behind this downturn and explore what the future might hold for the world's leading cryptocurrency. The road ahead is uncertain, but one thing is clear. Bitcoin is not down for the count. Its resilience has been tested time and again. This time will likely be no different. The question is, are you ready for the ride? One of the biggest factors weighing on Bitcoin's price is regulatory uncertainty. The U.S. Securities and Exchange Commission, SEC, has taken a more aggressive stance towards cryptocurrencies in recent months. This has created fear, uncertainty, and doubt, FUD, among investors. The SEC's crackdown has been broad. They have targeted everything from initial coin offerings, ICOs, to decentralized exchanges. This has made it more difficult for businesses to operate in the crypto space. It has also made investors wary of putting their money into crypto. The lack of clear regulatory guidelines is a major roadblock for the industry. Without clear rules, it is difficult for businesses to innovate and grow. This uncertainty is reflected in Bitcoin's price, as investors are hesitant to commit to an asset class facing regulatory headwinds. Beyond the regulatory landscape, the global macroeconomic backdrop is also playing a significant role in Bitcoin's decline. Rising inflation, interest rate hikes, and geopolitical tensions have created a risk-off environment across financial markets. When investors are worried about the economy, they tend to move their money into safe haven assets like gold and government bonds. This flight to safety often comes at the expense of riskier assets, including cryptocurrencies. As a result, Bitcoin and other digital assets have become increasingly correlated with traditional markets, moving in tandem with stocks and other assets. This interconnectedness leaves Bitcoin vulnerable to the same macroeconomic forces that impact traditional markets. Until the global economic outlook improves, Bitcoin is likely to remain under pressure. The cryptocurrency market is no stranger to the influence of large holders, often referred to as whales. These entities, with their vast holdings, can significantly impact market movements. When whales buy or sell large amounts of Bitcoin, it can create volatility that ripples through the entire market. Recent data suggests that some large holders have been reducing their Bitcoin positions. This selling pressure from whales has contributed to the downward pressure on Bitcoin's price. While it's impossible to know their motivations for sure, it's likely tied to the regulatory and macroeconomic concerns mentioned earlier. Whales are an inherent part of the cryptocurrency ecosystem. Their actions can create both opportunities and risks for other investors. Understanding their behavior and tracking their movements can provide valuable insights into market sentiment and potential price swings. Amidst the negative headlines, there are some glimmers of hope for Bitcoin. The U.S. Securities and Exchange Commission, or SEC, is currently reviewing several applications for a Bitcoin exchange-traded fund, also known as an ETF. The approval of a Bitcoin ETF would be a major milestone for the industry, as it would make it easier for institutional investors to invest in Bitcoin. A Bitcoin ETF would trade on traditional stock exchanges, providing a regulated and familiar avenue for investors to gain exposure to Bitcoin without directly holding the digital asset. This increased accessibility could attract significant capital from institutional investors, potentially driving up demand and price. However, the SEC has been hesitant to approve a Bitcoin ETF in the past, citing concerns about market manipulation and investor protection. While the outcome of the current applications remains uncertain, the potential for a Bitcoin ETF approval offers a glimmer of hope for the future of Bitcoin. The regulatory scrutiny facing the cryptocurrency industry is perhaps best exemplified by the ongoing legal battle between Ripple Labs and the SEC. The SEC alleges that Ripple's sale of XRP tokens constituted an unregistered securities offering. This case has significant implications for the broader cryptocurrency market, as it could set a precedent for how the SEC classifies and regulates other digital assets. A victory for Ripple could provide much-needed regulatory clarity for the industry. Conversely, a loss could have a chilling effect on other cryptocurrency projects. The outcome of the Ripple case is still uncertain, and hinges on the court's interpretation of securities laws in the context of cryptocurrencies. The case is being closely watched by the entire industry, as it could have far-reaching consequences for the future of digital assets. While Bitcoin has been struggling, Ethereum, the second largest cryptocurrency by market capitalization, has shown relative strength. This resilience can be attributed to several factors, including Ethereum's robust development roadmap and its central role in the booming decentralized finance and non-fungible token sectors. Ethereum's upcoming upgrades, particularly the transition to a proof-of-stake consensus mechanism, are expected to significantly improve its scalability and reduce transaction fees. These improvements could further enhance Ethereum's appeal to developers and users, solidifying its position as a leading blockchain platform. Ethereum's focus on innovation and its ability to adapt to the evolving needs of the decentralized application ecosystem have positioned it for continued growth, even in the face of broader market uncertainty. Predicting the future of Bitcoin is a fool's errand. The market is notoriously volatile and unpredictable. However, by analyzing historical trends, current market sentiment and emerging technologies, we can make some educated guesses about what the future might hold. In the short term, Bitcoin's price is likely to remain volatile. Regulatory uncertainty, macroeconomic headwinds, and whale activity will continue to influence market sentiment. However, Bitcoin has weathered similar storms before. Its decentralized nature and limited supply make it a resilient asset. In the long term, Bitcoin's future remains bright. As more people understand its value proposition as a decentralized, censorship-resistant store of value, demand is likely to increase. Furthermore, as institutional adoption grows and regulatory clarity emerges, Bitcoin is poised to become a mainstream asset class. The path forward for Bitcoin is uncertain, but one thing is clear: it has the potential to revolutionize the financial system as we know it. The cryptocurrency market is at a crossroads. Regulatory scrutiny is intensifying. The global economy is on shaky ground. Yet, amidst the challenges, innovation continues at a rapid pace. Bitcoin, despite its recent struggles, remains the flagship cryptocurrency. Its decentralized nature and limited supply make it a unique asset with the potential to disrupt traditional finance. However, the road ahead will be bumpy. Volatility will persist. Regulatory hurdles must be overcome. Ethereum, with its thriving ecosystem of decentralized applications, is well positioned to capitalize on the growing demand for blockchain-based solutions. Its upcoming upgrades and continued innovation make it a formidable force in the industry. The cryptocurrency revolution is far from over. It is just beginning. The coming years will be critical in shaping the future of this nascent asset class. Those who understand the risks and opportunities inherent in this space are best positioned to benefit from the transformative potential of cryptocurrencies.